y'all. Today is Monday, November 10th, 2025. For those that don't know, I'm Luther Wilson III, real estate pro here in the Kansas City market, representing for Upside Property Services. And throughout my career, my primary focus has been on serving investors, helping to find opportunities, placing capital, investing alongside partners and so forth. But in today's session, I want to talk about the real estate investing business in general. So what is investing in real estate as a business all about? And I think for a lot of us, we may not even think about it or realize that investing in real estate is a business from the beginning. Having an entity, having access to some type of capital, and then the ability to borrow using some type of mortgages. Usually that's how it starts for a lot of investors who are able to get in and stay in, I'll put it that way. So when I think about investing in real estate, I also think about investing in the stock market. And the way I see it, and as I've grown as an individual, as a business owner, investment operator, and so forth, I kind of see some correlations between real estate and the stock market. Really more so when I think of investing in real estate, I really push for long-term investing, okay? And for those who are doing short-term transactions or perhaps selling real estate, I kind of see that as trading, all right? So when you think of the stock market, a lot of times, you think of buy and hold for an extended period of time, if not years or decades on end. And then you also have brokers or dealers who invest for the short term, or they trade stocks, or they broker deals via the stock market. So I think there's similarities there. On the real estate side, you got real estate brokers, you got deal finders and wholesalers, and then you got lenders, and the list goes on. And then I think that is almost like trading or dealing in a way. And then when it comes to the investing, buy and hold, I think that's what investing really is meant to be for the most part. And so I talk about capital, strategy, and operations. If you've seen some of my stuff on social media and previous videos on my YouTube channel, you've heard me talk about that because I think it's so critical. I see it as the three pillars. If all those can flow together more smoothly, then you're gonna have more success in real estate investing, that is. And so for a lot of us getting in early on, it's all about finding the deal, right? Finding an opportunity. And then from there, we have to figure out the capital aspect. And then maybe if you just sell it, right, you could assign it, or you could refer it out to somebody and get a commission or an assignment fee or whatever, referral fee or something like that. But for those, again, who want to invest and invest for the long term, okay, the deal is important, the opportunity is important for sure, but if you want to keep it and grow your portfolio, grow your wealth, grow your net cash flow, right? Grow your revenue, grow your net worth, that's what I meant to say earlier, then you're gonna have to figure out the capital piece, all right? And then from there, things can get really interesting because now you're in business and you have to operate that business. And part of operating that business is hopefully compensating yourself, and then for sure, compensating those who've helped you along the way, the property managers, the contractors. Of course, there's agents, appraisers, inspectors, and the title company, and the list goes on. All of those service providers, attorney, tax advisor, CPA, and the list, as I said before, goes on for those who help you actually run the business. And I bring this up, fourth quarter 2025, because there are some differences. There's been some changes to the rules and the regulations, the cost of the money, and then how the opportunities look now as opposed to 2 years ago, 3 years ago, 5 years ago, 20, 30 years ago, okay? And so I want more investors, new and old, seasoned or brand new, somewhat experienced or whatever, to have a better understanding of what the real estate investing is all about, so that you can avoid some of the pitfalls or some of the traps, and you can have not only a good, thriving business, and you can take care of all your service providers, and you can pay yourself as well, and you pay off your borrowers, your creditors rather, and I'm going to get into that here in a little bit, and then you can continue to move forward and grow and not feel bogged down or drained or indebted and putting on a facade. Because the big thing that I see in the real estate community, especially in the investing community, and I feel like I have slipped into it as well, I think it's just human nature. The tendency is to want to do a deal just to say that we did a deal, and then we get into a groove of finding opportunities, leveraging certain types of capital, doing the rehabs, doing the resale, growing the portfolio, which probably includes some type of refi and long-term debt, however that looks. And we can get into the routine, and we want to keep up with appearances, and we want to, it's rewarding to the ego as well, I guess, and it's somewhat addictive too, to do a deal, a transaction. It's a rush. But it can get to a point where we get carried away and we lose sight of, you know, what our goal is, what the end game is, and what's actually happening with the money that's coming through, the money that we're putting up ourselves, the money that we're using in first lien position, and the money that we borrow from outside participants, whether they're, you know, private money lenders or private equity investors and so forth. And so a big thing, and y'all have to bear with me, like I get impatient and frustrated sometimes because I feel like I've seen the same stuff over and over again. For those that know, my parents been doing real estate for 30 plus years. I have kind of been on and off, started off kind of dabbling 2008, 2009, and have been at it doing something in real estate since then. And throughout the years, okay, especially more so now, I have seen a lot of patterns, and I've seen a lot of investors do the same thing over and over again. And they end up getting the same results as previous investors got years ago. And, you know, again, like I want to encourage y'all to get your capital straight, right? Encourage y'all to make sure that you have a good strategy for whatever market you're investing in and whatever's happening real time in the economy and so forth. And then the operations, encourage y'all to have the operations on point. All of that together is huge. And so for a lot of investors, and I've had a taste of it too, we get into that routine kind of, or that cycle that I mentioned earlier, and it's easy to lose sight of what's coming in and what's going out. And the trend, or maybe not even a trend, one of the biggest patterns that I've seen over the years for real estate investors, we're here in the Kansas City market. It's a I don't know what the term is. It's probably an epidemic nationwide for real estate investors. But the pattern that I've seen is we get into the routine of doing deals, right? We're finding opportunities, and then we want to take down those deals, right? We want to keep it to either fix and flip, or we want to keep it to add to our portfolio. And as we're doing that, okay, it's going to get to a point where you know, you may use some of your own money, but you're probably using some type of short-term debt. And it could be a hard money loan, or it could be some type of private lender who's using or lending short-term funding, right? But the thing that I guess most investors don't want to talk about, or they don't know. I'm still trying to figure out what's going on in most investors' heads. Is I'm guessing that they're not really paying attention to the books. They're probably not tracking every single dollar. Okay, and it gets to the point. Okay, so you buy the property with hard money, right? You're gonna need to use some of your money or someone else's money, however that looks. It could be a credit card, it could be a line of credit, it could be a family member or friend, or it could be a business partner. And so that money is gonna need to come in to finish the project, to pay for the short-term debt, and then there's gonna be operational expenses, business expenses, overages on the renovation. I know y'all have heard me mention this before. If you pass the deadline, okay, and over budget and pass the deadline for virtually every single renovation project, okay? So that's where things get interesting. And then you have to sort through the refinance. So it gets to the point, my point here really is, and I told one of my mentors this a few weeks ago, okay? And this was regarding one of my partners and one of the portfolios that I've had throughout the years. I told my mentor, I said, look, yeah, it's great. We've been able to do some deals. We've been able to settle some debt. Our portfolio as a whole is performing, but we ended up with 7 houses and about $1 million worth of first lien position debt. And then we had over $100,000 that we had to pay back to the lenders because we needed that additional capital. Okay, so that's one big thing that I've seen and felt and experienced and have had to work through. And then another, and I'd venture to say, if the more deals you do, the more debt that you leverage, the more short-term loans that you take out, the more complex and the more convoluted and the more stressful and messy it can get. So at some point, you know, again, we're gonna have to count the money. And I don't think most investors are sitting down with their accountant or their tax advisor or whoever's involved to really figure out, is this thing going where we want it to go? Okay, who do we owe what and how long do we have to pay them back? And what is the actual net cash flow? Not necessarily the revenue that comes in, okay? Not so much the equity or your net worth, but you know, is the thing performing and will it continue to perform well if we continue in this manner for the next 6 to 12, 18 to 24 months? I encourage investors to try to look at least 3 to 5 years out, if not 10 years out or longer, okay? Okay, so I mentioned having the outside capital, that's huge. And the other thing, okay, so that's for growing your portfolio, right? The bird strategy that everybody thinks that they want to do, right? It works very well until the industry changes, until interest rates change, until you feel the effects of inflation and different things globally and economically start to change. Then you have to figure out, okay, cool, can we keep continuing in this manner, being mindful of what's happening real time, right? Instead of just continuing to plow forward, not really thinking about, is this thing where we want to go, and is this how we want to feel operating and doing investments, or are we just keeping up with appearances just to do deals because it's sexy and cool to do deals, despite whether they're profitable or if it's really fulfilling or not. Okay, that's something I want my clients and my partners and my audience to think about. Besides just making a boatload of money, does it fill you up? Are you enjoying the process? Or are you feeling drained and exhausted and having sleepless nights? Is that really how you want to live? Is having that money or that portfolio or whatever you're telling the public that you have really worth it? It's something you got to think about. So I mentioned some trends, not so much trends, but I guess the trends come and go, but the patterns that I've seen after helping over 100 investors. I've seen the same patterns over and over again. So I mentioned what I had a taste of, and I'm working through it right now. And I didn't even really have as big a portfolio as I wanted to have because I saw all the stuff happening. And I was like, no, this is freaking stupid. I can count, right? 5th grade math, okay? I sat down with my accountant, sat down with the tax advisor, and I had to realize, like, okay, I'm not gonna keep doing this because it's not where I wanna go. So the other pattern, so I mentioned the pattern for those who wanna grow their portfolio, scale their portfolio, investment long-term wise. Then the other pattern that I noticed for the traders, for the dealers, for the fix and flippers in particular, because you're doing the same thing. You go find a deal, and then you're gonna leverage it with hard money or short-term debt. And then you're gonna figure it out from there. So the pattern with the fix and flippers that I've seen time and time again is the same type of thing, except after you've flipped 5 to 10 houses, right? Or maybe 10 to 20, 30 plus houses, however many it is, right? After that, you end up owing your private lender money, and then you owe your credit card money, and then you might owe a family member or a business partner money after you flip, let's say 10 houses, right? So this is pretty deep and somewhat advanced, and I know that if you're newer, it's not going to make sense, but bear with me and keep going. Again, I'm encouraging y'all to try this stuff out, but have a backup plan and have at least someone you know who could step in and help you out financially, because you're going to need it 1000%. The more deals you do, the more opportunities you come across, the more individuals you're gonna need to be plugged in with capital if you wanna keep going. Okay, so for the fix and flippers, the pattern that I saw over and over again is they flip a bunch of houses and then they end up owing their private money lenders money after the fact. And I'm thinking to myself, scratching my head, like, is that really an investment model or an investment business that I wanna be a part of? Because again, this is deep, and the realities and the truths of being in business and human nature can really come out. And I've seen it, because you get to a certain point where you want to keep it with appearances and you want to keep doing deals, and so you're going to sacrifice some of your well-being or sacrifice your moral, whatever. You get to choose how you want to operate, if it's with integrity or not. Okay, I'll put it that way. Because when you do these deals, right, and you realize either early on, partway through, or afterwards that you needed additional capital to finish the stuff, when you sell that house, okay, you got to pay back the lender, right? Hopefully you paid your contractors, because I know that doesn't always happen, but you need to pay your contractors. The real estate agents are going to get paid through escrow, through the title company, all right? And then whoever you got that outside capital from, whether it was from your credit card company or your business partner or a colleague of yours, who then you got to decide, like, okay, at the end of that rehab project or at the end of that refi, I have a decision to make. Like, if I didn't pay myself, right, hopefully I got all my lenders squared away, but am I going to take profits? And I don't know if that makes sense. This is somewhat high level, but at a certain point, more investors are going to start waking up to this. Like, and you have to think about how you want to operate, how you want to play the game, how you want to live your life, because real estate investing is a business, okay? And you're going to need a good capital. You're going to need a good strategy, and you're going to need good business operations, okay? Because again, like, the idea, I would hope, is not to just do deals, but to create profits, and of course to, you know, help your community. And then you're serving those people who you're buying from. You are actually serving those people who you are renting to or selling the property to. And really, you're serving your capital investors and your private money lenders and everybody who's involved throughout the process, the dozens of individuals who might be involved on making that one deal or that one transaction go from point A to point Z. And then looking at that all along the way, what came in, what came out, who do I owe, how can I get them settled, right? Was this profitable for the business, and is this something that I want to continue doing for the next year or 5 years, or hopefully, in my case, hopefully the people rocking with me we're looking 10, 20, 30 years out. Okay, so this was just some general stuff that I went over, but it was definitely on my heart and on my mind because, again, fourth quarter 2025, things haven't necessarily been quite as much fun for a lot of investors and human beings on this planet. And I want to help shed some light on how we can be better stewards, how we can be better service providers, and for sure, how we can be more efficient, effective, productive, and profitable as real estate practitioners and investors. Okay, so hit me up if you want to know more. Again, we're here in the Kansas City market. I work with an amazing group of service providers and real estate practitioners. Our investments and the investors who I've been able to assist, I venture to say over 90% of them, if they have done what they needed to do and followed the strategy and used good capital and they operate the business as it should be operated, have seen success. And again, it hasn't been from short-term transactions. It hasn't been from fix and flip or wholesale. It's been from buy and hold properties. Okay, long-term rentals, seller financing. Check out the previous videos. I pretty much lay out the blueprint, and if you want to learn more and have a strategy session on how you can make that happen here in Kansas City or wherever you so choose, I'll be here. Have a great day. Peace, y'all.